Hi, I'm Shane Balkham, Chief Investment Officer at U Asset Management, and welcome to my 2-minute missive. History doesn't repeat itself, but it often rhymes. That's a quote from Mark Twain and one of my favourites, and it sums up what's happened over the last 10 days quite nicely. We have had echoes of history rhyming from the global financial crisis back in 2008 to the last 10 days, with banks seemingly failing left, right and centre. And what we've had is a symptom of interest rates being raised too high, too quickly. And for the Silicon Valley Bank, it was having a depositor base that was concentrated in one sector, the tech sector. And also then on the other side of that depositor base, having a lot of long duration assets. And longer duration assets are more sensitive to interest rate rises. That was rescued, as well as the Signature Bank in the US as well. Then we had Credit Suisse in Europe, which eventually had a cash injection given to it from the Swiss National Bank. And more recently in the US, we've had First Republic. What you had was a symptom of seeing these bank failures. A lot of depositors took their money out of smaller banks and put them into larger banks. First Republic being a smaller bank. And what we've had, constructed by the three J's, Janet Yellen, Jay Powell and Jamie Dimon, is a cohort of the larger banks depositing around about 30 billion into First Republic. So they received and beneficiaries of that change of depository, and they gave it back to First Republic. Interestingly, most all of the banks formed part of that cohort. Back in 1990s, when long-term capital management was in trouble, the banks did a similar thing to bail them out, and the only bank that didn't join that group was Bear Stearns, and we know what happened to them in 2008. So is there going to be any contagion? There probably will be another institution that is looking over its shoulder at this moment in time, and then we have the Federal Reserve and the Bank of England looking to raise rates next week. ECB has already raised rates by 50 basis points. Is that a mistake? Will the Federal Reserve and Bank of England continue to raise rates? If they don't, we may feel that there's something they're not telling us. If they do, we probably think it's only going to be 25 basis points. But as we get to the end of this rate raising cycle, this is where you get the situation where systematic things break. These views are my own, and before making any investment decisions, please see your financial advisor. Thank you.